James Dean, welcome back to Carleton. It's a pleasure to have you back.
It certainly is, Bert.
You were here 4 years ago and gave a very interesting and I must say a very prescient lecture on paradoxes and puzzles of our globalized world. Now, 4 years later, those paradoxes haven't disappeared, and perhaps some of them have been sharpened by the financial crisis that's sort of cast a shadow over globalization. So would you like to review for our audience what those paradoxes are, and are they still important? Are there new paradoxes that have cropped up since the crisis?
I think there are new paradoxes, but most of, if not all of the paradoxes were indeed prescient, I think, and some of them are more paradoxical than before. One of the paradoxes of the globalization process that's accelerated in the last 20 years is that despite the increased average income throughout most of the world, including the developing world, there is less equitable income distribution and wealth distribution, both within most globalized countries, such as rich countries like the United States and Canada, and also between most countries. The exceptions are a couple of big countries like China and India that have grown rapidly and to some extent have narrowed the gap between the rich world and the poor world. And so the paradox is that within those countries, particularly within China, income distribution is far worse than before. So this is a dilemma of globalization. The average income in places like China has risen dramatically, but the disparity between rich and poor has also risen dramatically, and it hasn't gone away since I first gave this talk 4 years ago. The second big paradox that really underlies the global meltdown, I think, that we had began 3 years ago, is that poor countries, and China still really is a poor countries lend much more money to rich countries than rich countries lend to poor countries. So China is the biggest lender in the world, and the United States is the biggest borrower in the world. Why is that? And that imbalance in global financial flows underlies the meltdown that began in 2007.
If I can just interject a quick follow-up question. Were global imbalances a cause or a consequence of the crisis, do you think?
They were a cause. I could elaborate at length, but
perhaps briefly for our audience, if you could explain in what sense global imbalances were one of the causes of the crisis, that might be helpful.
Well, they were a cause because they encouraged Americans to borrow far more than they should have, because the Chinese, on the other hand, were exporting far more than they were importing and had nowhere else to save their export earnings except in U.S. Treasury bills and other U.S. dollar investments. So their huge holdings of U.S. Treasury bills, which are now close to $2 trillion, enabled American interest rates to fall dramatically. In other words, Americans could borrow very, very cheaply from the rest of the world. And that was one of the major causes of the housing bubble and then the housing collapse, that interest rates were so low that people borrowed to buy houses that they couldn't afford, and they also bought a lot of other things that they couldn't afford because interest rates were so low. So that was a root cause, yes, of the meltdown, which began with as we know, a housing crash in the United States. That's not to say that we should blame China or even that we should blame Americans. I mean, if you were told that you could have a house with no money down and 0.5% interest for the first 2 years, you might be silly enough to do that too. But Americans were, I don't think, are culpable, but I think a system and a lack of oversight was culpable, and we can come back to that. Let me run through 2 or 3 more of these paradoxes that I identified 4 years ago. I said then that there's no consensus, even among democratic capitalist countries, about optimal government involvements in their economies. And we've seen, it's November 2nd now, we've just seen the American midterm election. There seemed to be a consensus 2 years ago that the Americans wanted more involvement in their economies. And then we've had the Tea Party reaction, which has influenced this election in the United States, that shows that they want less. So the Americans are schizophrenic, or at least they're split about this. And so is much of the rest of the world. Interestingly, also, the former communist world in the east of Europe and China itself and India are in some ways embracing capitalism more wholeheartedly than Western countries like, well, Western Europe, the United States, and perhaps even Canada.
And that fact itself is paradoxical, given that, in some sense, the consensus on market-oriented policies emanated from the United States, from the West, and they're now being embraced more by developing countries.
Correct.
And there's a retreat in some ways.
There are countless examples of that, of how not just the American embrace or the Anglo-American embrace of free markets has now been embraced more tightly by Eastern Europe and by Asia, but also, well, relatedly, I'd have to say the sort of free-for-all spirit where anything goes and things are less regulated and there's less intrusiveness into one's daily life is more evident now in Eastern Europe than in Western Europe or North America. You can smoke, drink, drive without a seatbelt, stay up late, and so on. You know, this is not all good, but there's a certain. I've just come back from Romania, and there's a certain sense of freedom when you move from Western Europe to Eastern Europe. It's very odd. Having said that, one of the other paradoxes that I talked about was that many people in ex-communist countries claim that they're worse off under capitalism. But I think that that's an age issue, and I noticed this last time that I heard it less and less. It's just a few years since I was in Eastern Europe last time, but the younger the population and the more the people who benefited from the communist era have died and gone away, the more happy I think the new generation is with it. For example, I spent some time in East Berlin. East Berlin is now richer than West Berlin. Who would have believed that? And that's not because they reinforced their old socialist ways, quite the reverse.
Which also suggests an interesting sense that I get when I travel, and I'm sure that you do, which is there's often a greater sense of excitement, sense of adventure about the global economy, about capitalism, about the possibility of getting rich in places like Eastern Europe and in India, where I'm often traveling, China. Mm-hmm. Whereas here in the West, there seems to be a sense of malaise. That people are not quite sure what's going to happen, how secure their incomes and their jobs are. Would you share that sense, that there's a distinct sense of optimism in the
India
emerging
and
world?
Even more in China, people show off their wealth. And we used to do that 100 years ago, but we're kind of embarrassed about it here. Maybe it's something to do with the tax man as well. Another development that I talked about 4 years ago that I think has accelerated is that in academic economics, there's much more attention to psychology than there was before. We call it behavioral economics, looking at how people really behave rather than assuming that they maximize their own welfare automatically at all points in time. And there was no better example of that than the individual traders and bond sellers and mortgage sellers and insurers and credit swappers and so on Wall Street, who thought that they were acting in their own self-interest and ended up bringing down their own demise. And so the study of behavioral finance has got a new shot in the arm. Professor Schiller is on TV all the time. He was here in Canada just last night talking about the irrationalities of the housing market. And George Akerlof, Nobel Prize winner.
Market for lemons fame.
The market for lemons fame. So Akerlof and Schiller, shortly after the financial crisis, published, I was going to say a best-selling book, but certainly a well-selling book called Animal Spirits. And animal spirits is the colorful phrase used by John Maynard Keynes in the 1930s to describe the confidence or lack of confidence in the business community. And he really had no analytical explanation for it, but he just said when fear spreads in the business community, it's contagious. And when optimism spreads, it's contagious. And furthermore, it overshoots in both directions. And we see that time and time again.
And this is something which can't be put into conventional, rational expectations, economic models. And this is perhaps what much of the profession missed before the crisis.
Correct. So Keynes himself had a sense of that, but now with modern tools and the help of psychologists and the help of controlled experiments, which we never did in economics, where you ask people what choices would they make. You conscript your students into an experiment. There's all kinds of evidence that people do not necessarily act in their own immediate self-interest. There's lots of evidence that people are excessively greedy or excessively fearful. There's other evidence that people are fairer, take fairness into account more than we would advise them to do when we're teaching them rational behavior in economics classes. And the classic example was an experiment where they've done this many, many times. They've done the same experiment on economic students and then students who've never studied economics. And
this is the classic cake splitting.
The cake splitting
experiment.
Yes. Do you remember what that was?
Where the rational economistic approach would be that person A takes almost everything and leaves a crumb for person B and makes him or her take it, leave, or leave it offer. Whereas we have these intrinsic notions of fairness, so we tend to get 50-50 splits as a
yeah, it's sort of a flip of coin, whether you would have a crumb, whether you would rather have a crumb or nothing. And a rational person would say,
I'll take the crumb over nothing.
I'll take the crumb, especially if the odds are biased against me. But irrational people say, no, that's not fair. And so the economists, we have trained our students to ignore fairness, which I think is wrong. And we have a very, very hard time incorporating fairness into economic policy. The idea of a fair wage or fair trade coffee or you see fair trade everything nowadays. And the economists are fond of saying, well, fair trade means that we impose very high wages on Bolivians and Colombians and Brazilians and so on, and therefore we just put them out of work because we think that they should be paid $5 an hour rather than 50 cents an hour. Same argument about child labor, that otherwise the whole family would be starving to death if we didn't enslave them in the Nike camps. It's a real dilemma, but
perhaps using this as a cue, we could segue a bit into one of the questions that's surely been sharpened by the crisis, which is something that you talked about 4 years ago, which is to what extent does the crisis reflect a failure of the market, a market failure, or a failure of the government? What went wrong 3 years ago?
I think my personal feeling is that it was a massive market failure that should have been anticipated by what you might call prophylactic regulation that would have foreseen this. The regulation in the United States was particularly lax in the sense that it applied only to the banking system. And non-banks were in fact taking most of the money in, even deposit money was going into short-term mutual funds, and lots of investment money was going into the so-called hedge funds, and none of these were regulated by the blanket of regulations that's controlled by the Federal Reserve System and the controller of the currency. And if Greenspan, the governor of the American Central Bank at that time, can be blamed for anything, it was for placing undue faith in the market's ability to weed out good assets from bad assets in this non-regulated part of the economy. One of the most shocking failures of Wall Street was that Moody's and the other rating agencies rated these mortgage-backed securities as AAA securities. And part of the reason that they were willing to do that was that the banks holding these AAA rated securities, or these assets which really turned out to be toxic, engaged in what are called credit default swaps, which was really a way of insuring them against default. And so the world's largest insurance company at the time, AIG, the world's largest insurance company, was writing this insurance. They were buying credit default swaps.
So sorry to interrupt, but
Yeah.
again, for our audience who might not know these sort of esoteric financial derivatives, could you explain what is a credit default swap? How does it work?
It's just a swap of the risk that the thing will default. So somebody has to go on one side of the bet and somebody on the other side. And so AIG, the insurance company, took the bets that these toxic assets would not en masse go bad.
Fail.
They kept saying they're diversified, and so it's impossible that all the mortgages would go bad at the same time. Then you had other people, it turns out a relatively small but wise group of people, who were taking the other side of the bet. But the point that I'm trying to make is that the banks who ultimately held these toxic assets believed that they were completely insured by AIG, and AIG in turn was a AAA rated company by Moody's. And so even someone like Greenspan believed that the system worked well enough that he could say to the big banks, look, your assets are AAA because they're insured by a AAA rated insurance company. And therefore, you don't have to hold as much capital against your assets as you otherwise would. And so there's a famous statement by him where he said, isn't this market system wonderful, where we can offset risk in these elaborate ways through these credit default swaps and so on. And we can therefore allow our banks to hold less capital. Now, holding less capital is the inverse of being more leveraged. What it really means is that you can lend more with less liquid capital to underlie your loans in case they go bad. And so Americans went from an 8% capital ratio to a 4% capital ratio, the big American banks. Meanwhile, here in Ottawa, we had Julie Dixon, we had the world's best bank regulator who said, no guys, you should be raising your capital asset ratios from 8% to 12%. And Canadian banks rose to the very, very top, #1 ranked banks in terms of soundness in the world. And Americans fell to number 40 in the world.
So what does that tell us then about the difference between regulation in the U.S. and Canada?
You know, that's a very good question. I mean, one thing that we're proud of is that we have a single regulator. One thing that we weren't proud of until this came along is that we were more conservative, both in terms of regulation and in terms of compliance. So remember that Canadians originally came from loyalist stock who believed in good government rather than
Unfettered freedom and
well, the pursuit of happiness.
That's
You
right.
see, life, liberty, and the pursuit of happiness. So
it was peace, order, and good government.
so Wall Street interprets life, liberty, and the pursuit of happiness as pushing the envelope. And American business, I'm not dissing American business because we always, most of the time, we who study financial systems have admired them because they took more risks. And if you really wanted venture capital, or if you really had an experimental idea, this was very much true in the IT area in the late 90s and so on, you could raise money in New York, but you couldn't raise it anywhere else. And the Canadian banks were too conservative to do that. But by the same token, the Canadian banks are not only more regulated, but they're more compliant. In other words, the culture of finance in this country is not to push the regulatory envelope, but rather to stay within it. I think that's deeply embedded in Canadian culture, if you like. So I hate to say that our banks are sounder, but because we have a different culture, but I think there is something in there.
There is something to that.
Yeah.
If we could come back to a question we started with. We know that globalization per se didn't cause the crisis, but perhaps it amplified it through rapid capital flows. And if you think of a country like Iceland or like Ireland,
That's right.
which threw itself open to unfettered capital flows and
Yes.
essentially got hooked on foreign capital, that form of globalization may have made the crisis worse for those countries. What do you think?
Yes, and I think one of the great dangers of this is to confuse the global financial meltdown with a meltdown of globalization in general. Globalization in general has enriched the world because it fundamentally means free trade in goods and services. So it means the fundamental theorem of a fundamental axiom of economics is that if I voluntarily buy something from you and you voluntarily sell it to me, there is a gain from trade almost by definition. You wouldn't have done it if you didn't feel better off, that you were better off, and I wouldn't have sold it to you, or I wouldn't have bought it from you if I didn't feel that I was better off. Now that's true in terms of international trade, and so generally international trade benefits both sides. But international flows of capital, the money that people borrow in order to do international trade, or in order to run huge deficits like the United States, as the United States does, or huge surpluses the way China does, it doesn't obey the same laws as trade in goods and services. And notably, it tends to overshoot for these irrational reasons that we talked about earlier.
Would you
Go
agree
ahead.
then, James, with economists like Jagdish Bhagwati and Joe Stiglitz ironically agree on this important point, that
Yes.
there's an important asymmetry between trade in goods and trade in capital?
Yes, absolutely. And I think that it's a problem that I think is worse now than it was at the beginning of the financial crisis, because to some extent the global imbalance is worsening. China, in its own interests, has refused to be pressured into appreciating the Chinese currency, the yuan. In order to stimulate their own exports, which they needed to survive the crisis.
Could you perhaps speak
go
to
ahead.
that? Sorry to interrupt again, but again for the
Yeah.
sake of our audience,
Yeah.
there's been so much in the news as of late about currency manipulation
Yeah.
or allegations that the Chinese keep the yuan artificially low. Paul Krugman is writing about this in the New York Times just about every other week. What is your take on this? Is America wrong to criticize China for its currency and exchange rate policy? or are the Chinese doing what they have to do, as you suggested, to
Well,
keep capacity in their own economy?
probably. I've never liked the American pressurizing of China, and I never thought that a small appreciation of the yuan would make much difference to the American trade deficit with China. And furthermore, Americans tend to forget that the flip side of it is that Americans buy all those treasury bills and make it possible for the United States to borrow cheaply precisely because they're running that huge surplus, so that the surplus has a plus side for the United States as well as a downside. And the Americans seem to be also confused about whether they want a falling dollar or a rising dollar. If they want a falling dollar, then of course they should allow the Chinese to appreciate, to go up against the dollar. But yes, it is a problem because every country, most countries in the world trade heavily with China, and the Chinese currency is pegged to the American dollar. But it's not as bad a problem as people make it out to be, because because it's pegged to the American dollar. When the American dollar is strong, the yuan is strong, and vice versa. Now that the American dollar is weak, I think that there is greater pressure from the Europeans and other people who are finding that against the euro, the yuan is intolerably cheap, and their exports have become intolerably expensive. And that's where you've got this fear of currency competition, or competition to keep currencies low, where every country is trying to keep their currency relatively low in order to compete with the Chinese. And that is, in the 1930s we had a trade war of that kind, and it was preceded by competitive devaluation, and there is a danger that there's competitive, not devaluation, but interference to keep currencies artificially low throughout the world. So the message of what I'm trying to say is that there is a global imbalance problem, but it can't be solved just by the Chinese. The Chinese are much bigger important relatively than they've ever been, and so the Chinese have to play a big role in it. We can't do it without the Chinese, but there has to be cooperation between the Chinese and the other countries with trade surpluses, which includes the Germans and the Brazilians and so on, but and the Koreans. But there also has to be cooperation across the other side of the fence, particularly with the United States that's running the trade deficits. And so there's a great need for cooperation over currency flows, and also some consensus over controlling currency flows, because a lot of countries now, including Brazil and Malaysia and so on, are imposing very high taxes on the inflows of capital, because the inflows of capital to these booming countries is causing their currencies to appreciate enormously, or alternatively, if they do what the Chinese do and buy up all that inflow of currency, it causes their money supplies to increase unacceptably and causes inflation. So the Chinese and all these other countries are caught between a rock and a hard place. They don't really want to allow their currencies to appreciate, but at the same time, they don't want massive inflation. We saw a couple of weeks ago the Chinese increased interest rates and caused ripples throughout the world stock markets as a result. So it's a fragile system that is more connected than ever before, and it needs to be more connected than ever before. And the only qualification I would put on that is two, that there needs to be high-level coordination of exchange rate policy in particular between countries, and secondly, that there needs to be, I think, tolerance of controls on capital flows, particularly inflows of capital that overshoot
and could destabilize
and
smaller
are in
economies.
danger of destabilizing countries like Brazil, throwing them back into an inflationary spiral.
Now, your remark suggests a question to me, which something that you and I have talked about, which is what our friend Bob Mandel often calls a missing link in the equation, which is this system of flexible exchange rates. And could one argue, or would you agree with Bob, that if we move to some kind of global unit of account, that the global imbalances problem might sort itself out eventually? That this excessive reliance on the US dollar as a reserve currency and the system of exchange rates with excessive volatility is part of the problem. What would be your take on that age-old debate?
My take on the age-old debate is that either one extreme or the other would work well, but not the system that we have now, which involves ad hoc interference. So if we could really get the world to agree what Bob wants them to do, and that is all either move to a global currency or peg to a global standard, the way it was under the gold standard or under the dollar exchange gold standard
Under Bretton Woods.
Under Bretton Woods between 1947 and 1973, then the system might work well. But the alternative is just to make all exchange rates truly flexible and to discourage interference with exchange rates, which is the classic free market solution. And economists are split on that, and I'm still instinctively much more in favor of the freely floating system, including between the United States and Canada, which is always an issue here. You know, should we peg to the U.S. dollar or not? And nobody's saying we should now because we're rising naturally against it. But people will be saying as soon as the Canadian dollar starts to fall against the American again, people say, oh well, peg it. But you know, pegging it invites then a big trade deficit with the U.S.
What would be the forum or the mechanism that we would want to use to coordinate monetary and exchange rate policies? We seem to have a missing institution here.
Yeah, we do, and it can no longer be the United States. The United States sort of emerged in 1990, hegemonic,
After
economically,
the collapse of
militarily,
the Soviet
everything.
Union.
It's not now, and it's you know, not the loss of Iraq, but the massive mess up of Iraq and now Afghanistan and so on has weakened the United States, and the financial crisis has weakened its reputation economically. Therefore, I believe that the expanded role falls naturally to the International Monetary Fund, as it did in the late 40s.
So you would see the IMF as a viable institution that could help manage
I think
global exchange rate
and
coordination.
it certainly wants to, the way that they're talking. Dominic Strauss, the way he's talking now, he wants to be the manager of it all. And in the past, the last time this happened, for opposite reasons, that the American dollar was excessively strong, in 1985, the Americans and the Japanese and the Germans and so on met in the Plaza Hotel in New York.
Plaza Accord.
And they came to an accord, and it kind of worked. It did work. The American dollar was, with the cooperation of the Germans and the Japanese, was brought down. The Germans and the Japanese sold American dollars, and simultaneously with the Americans. And the Plaza Accord worked. But I don't think the U.S. is in a position to hold such a meeting. Even the Plaza Hotel has closed down. So
that's right. And the world is more complex now, and with more players, different players.
That's right. And so it's going to have to be the G20, not the G3 or G4, or whoever was at the
original Plaza
I don't know,
meeting.
Was Canada there? That would make it the G7.
That would make it the G7.
Yeah.
Well, you raise an interesting point, and this perhaps could take us into a next point of discussion, which is the changing shape of the global polity and the global economy with the rise of India, the rise of China, the BRIC countries, the BRICs as they're called, famously dubbed that by Jim O'Neill of Goldman Sachs. Mm-hmm. Do you see an incipient change in the way that the global economy is managed, how would that play out according to you?
Well, this was well underway before the global financial crisis, and that term BRICS was coined 6 or 8 years ago at least. And BRICS, remind people, means it means Brazil, Russia, India, and China, 4 very large emerging economies that now need to be taken very, very seriously. And they're the kind of backbone of the new group of the the G20. Sometimes South Africa is included in there as well as the strongest African economy. The meltdown in the United States, which then spread to Western Europe and Eastern Europe, has increased the relative importance of the BRICS and a dozen other developing countries, because those countries, after faltering briefly at the beginning of 2008, by the end of 2008, were back to almost double-digit growth rates. And in the West, we're nowhere near there. And so the gap between us and them is widening very rapidly.
In terms of growth rates?
That's right. And so the meltdown has accelerated the relative importance of those countries, which began before the meltdown.
Do you think it would be a stretch to say that perhaps the so-called decoupling hypothesis might be back? It had been written off for a while when these countries did falter, as you suggested. But is there perhaps a hint of that decoupling notion coming back?
Sure. I mean, there was always this idea that the rest of the world was coupled to the United States, that when the United States sneezed, everybody else got pneumonia. And indeed, Asian countries, including China, did falter for a little while when the Americans weren't importing as much. But they're back in business much more quickly than before. So they are decoupled now. They sell to each other much more than they used to. And they continue to sell to us, I would argue, partly because in a recession, we're going to buy more Chinese goods, not fewer, because they're cheaper. We shop more at Walmart rather than at Tiffany's. Why? Because Chinese can produce good imitations of diamonds, and they're much cheaper. So I think that the decoupling of the rapidly growing BRIC countries, particularly in Asia, but also Brazil and South Africa, is permanent.
Having said that, do you think that there's perhaps a premature sense of triumphalism in places like China and India? There's a growing assertiveness that they've now arrived. They want their place at the big table.
Sure.
India wants a seat on the UN Security Council, a permanent seat, which no one particularly wants to give it, but this is an aspiration. So is there perhaps a premature sense of having arrived in some of these countries? Because there's still a massive amount of poverty.
Sure. But I don't think in the case of India and China it's premature. And remember that as recently as 5 years ago, the Americans were in a great triumphalist mood. They were in a triumphalist mood from 1990 right until 2006, saying, "Look at us, we're the best, and our system works, and come to us for advice about everything." And
a la Francis Fukuyama's end of history thesis.
Yes, as of the end of history. So I think we need to gracefully accept the fact that Asia is and will continue to be a major player. It doesn't, and it's important also to understand that because China and India get richer much faster than we do, we're growing at 2% and they're growing at 8% or
9 or 10%.
10%.
Almost.
That doesn't mean we get poorer. It just means that the gap between us and them is closing. It'll be 40 or 50 years before the average Chinese or Indian in India and China, at least 40 years, before their per capita income is as high as the United States, and people tend to lose sight of that.
Could we pursue this a bit? Because as economists, absolutely, I agree with you, we don't like to make relative comparisons, and you're right that if globalization is well managed,
Yeah.
it's gainful for the West and for the emerging countries, for the BRICS. But political scientists often point to the importance of relative position and relative strength and power. So is it true that, or I can put it this way, that growing the pie isn't a zero-sum game, it's mutually gainful, but splitting an existing pie is a zero-sum game. So is it true that as China and India and the rest become relatively more important, they're still poorer than we are in the West, but they're becoming relatively more important, that their voice in global coordination and policy making will become more important? And is that what should be happening, do you think?
Well, it is happening whether we like it or not, and I think, I don't think there's any particular danger in that except possibly militarily. And so there's a great paranoia in the Pentagon about China. I don't think China is aggressive, but China will defend its interests in Taiwan primarily, and the Sprat Islands and little places like that more effectively than before. And at some point the Americans are going to have to give up and pretend that they didn't give up, but come to some kind of accord with Taiwan and China. They can't defend that forever. So countless examples like that are going to result from the increasing power of the BRICS. In South America, Brazil is going to be more powerful than perhaps American military strategists or political or whatever would
want.
Would want. But I see nothing wrong with that. I think the greater danger is these out of control, nearly failed states with access to nuclear weapons, because the Chinese are not going to launch nuclear weapons, nor are the Indians. But the Indians might do so in retaliation against against Pakistan. You see, so Pakistan is the largest nearly failed state, and I think we have to worry about those kinds of countries in Yemen.
And where you just been working, Sudan.
Sudan, they don't have nuclear weapons, but Sudan borders on 9 countries, and it could easily be that they slip back into another civil war, and that will affect all 9 countries with millions of refugees across all 9 borders. And those are the kinds of things that we should worry about. And getting back to relative power, the Americans are powerful and influential politically in Sudan. The Chinese are very powerful economically. The Chinese built and control the oil wells and the pipelines. And so the Americans need to sit down with the Chinese and say, look, it's in our mutual interest for Sudan
not to fail.
Yeah, to prevent war. I mean, there will be some form of war within the next 4 months in Sudan, because the South is voting to separate from the North. And the question is whether it can be contained, and whether the Americans can cooperate with the other big players, particularly the Chinese. You see, if the Americans said to the Chinese, look, would you join with us in a threat to cut off, to blockade the oil exports if Khartoum doesn't cooperate, and just starve them into submission, the sort of worst case scenario. And because the U.S., this illustrates the point perfectly. See, the U.S. in the past could simply have put a blockade in the Red Sea against the port of Sudan, which exports all this oil to China, and say, okay, we're not going to let any oil out until you cooperate with us and stop harassing the south of Sudan. But they can't, the American Navy in today's geopolitics can't go in and board a U.S. naval ship.
A Chinese naval ship.
Sorry, a U.S. naval ship can't board a Chinese naval ship. And so that's the kind of new reality that the Americans have to get used to.
You talk about China and the way it operates in Africa, and this is something that raises alarm bells often in the U.S. and in the West. The Chinese operate in Africa very differently from the Americans, that they're perhaps less worried about niceties like human rights and democracy, and they're willing to go in and strike deals that will secure access to resources.
Yeah.
What is your take on that situation?
On this issue, again, I'm very pro-Chinese and persuaded that the Chinese at this point are probably doing more good for Africa than Western aid is. Last year, there was, I think, $40 billion of Chinese foreign direct investment into Africa. And that, for the first time in history, was in post-World War II history, is more than the flow of Western aid. And there's a large body of thought that Western aid has, on balance, done great harm to Africa. Although, shouldn't overstate the case, because it's saved lives, but Africa is the only serious investors in Africa are the Chinese. And if you talk to Africans, they say, we're happy that here in Zambia, the copper mines have been reopened, and they are using Zambian labor, not just Chinese labor, and we're exporting copper again, and
they're doing it without a lot of red tape and bureaucracy.
And they do it with without all the red tape that the World Bank and everybody else demands. So it's true that there have been human rights abuses by the Chinese, but what we should be doing is saying to the Chinese, look, we like your being here, and we will help you if you obey certain guidelines, such as when you go in and drill an oil well, you make sure that the people who used to live in that area are taken care of in some way.
As we come towards the end of our time, James, could we reflect a bit, or could you reflect with us on where do we go from here in this sort of grand project of globalization that perhaps has gone a little awry in the last couple of years? What do you see as the short and medium term and longer term challenges for globalization and for managing it?
I think just diplomacy, both at the political level and moving into the military level, and certainly at the economic level. And I think that the G20, which is the world's 20 most important economically countries, rather than the G7, is going to have to be the forum for that. And we've talked a lot about economic cooperation, the danger for descent into financial mercantilism, in other words, competitive devaluation, where everybody's trying to protect their own exports or subsidize their own exports through competitive devaluation. That's a great economic danger. And there's a great military, there's a great threat from failed states and unsupervised nuclear powers. So I should also mention Iran. I think people have to understand that Iran is inevitably going to be a major power in the Middle East, and start talking more seriously about how to cooperate rather than confront that issue. So there's all that. So it ranges, as I say, from economic through military to purely diplomatic efforts. And I would like to think that we haven't mentioned the Middle East, but I would like to think that the U.S. can reach out to countries that could be broker states like Syria. And I know, in fact, they are
doing that.
But there's just going to have to be less sense of unilateralism in American foreign policy.
Do you, and perhaps as a final question, you mentioned that today we now know the midterm poll results, election results in the U.S., and the Democrats have suffered a major reversal. Is there going to be now a sort of backsliding into protectionism, a danger of protectionism once again rearing its ugly head in the U.S., and what are the dangers of that, and how would we try to offset that?
Republicans are funny because traditionally they've argued against protectionism and accused the Democrats of protectionist tendencies. But I think that there's a protectionist wing within the Tea Party itself, and that the Tea Party, the new Tea Party Republicans are, I expect, going to lead the call for sanctioning or punishing China for the low value of its yuan and so on. I think that's very, very dangerous.
And so paradoxically find common cause with the left wing of the Democrats, who are allied to labor unions.
That's very good. Yes, I think that's a looming political paradox. The left wing of the Democrats with the right wing of the Republicans. See, right wing populism and left wing politics have often been bedmates, even here in Canada.
Well, on that paradoxical note, perhaps we should bring this conversation to an end. Thank you very much, James Dean.
It's always a pleasure talking to you, Vivek.
It's a great pleasure, and we'll do this again in another 5 years and talk about yet more paradoxes.
Or maybe 5 months there'll be more paradoxes.
Thank you very much.
Yeah.
Thank you.